You pressing the button again, Steve?
No, I swear I didn't touch anything.
Oh, okay. Morning, everybody. It's the 13th of January. We are Signal Centre Talking Ball. It's Friday the 13th. Oh, scary. Yeah, so fallout from the CPI number yesterday. Plenty going on in the markets. We're going to run through all of that. We're going to talk about our trades from yesterday, and yeah, hopefully set you up for the day ahead and close out the week hopefully on a high. How you doing, Steve? This morning, you all right?
Yeah, not too bad, thank you. Yeah,
Good.
yeah, looking forward to end of a week and then a couple of weeks break for me
Are you off from Monday? Are you?
from Monday. Yeah,
How dare you?
I know, how very dare me. Um, but I do feel like I want to sort of like continue the morning little gun to head. What so I might sort of like sneakily crawl out of bed and just like on the laptop and just go.
Okay. Have you booked somewhere to go yet?
Yeah, we've got Tenerife lined up, so but the weather looks shocking.
Oh no.
Yeah,
Oh
so
no.
no, not good.
Well, let's hope
So
for clearer skies for you, Steve. If there are any Tenerifeans out there, then feel free to give Steve a shout.
yeah, don't bother.
Give him some ideas for what to do in a rain-soaking Tenerife. Anyway, let's get on with the headlines, shall we? Let's have a look at what's been moving markets over the past 24 hours. We know, obviously, the CPI number yesterday was the big draw for the markets, and the inflation number showed further signs of decline. We saw prices decline 0.1% for December, compared with the expectations of no change. So that must have been revised because the initial number came in at 6.5% from 7.1% previously. Sorry, that was in line with expectations and the lowest reading since late 2021. Food prices increased 10.4% over the year, while energy prices increased 7.3% after a sharp monthly decline of 4.5%. Gasoline prices fell sharply on the month as well, and also posted a slight net decline on the year. The markets firmed up on all of this, and also following the Fed view on this as well. Markets now priced in over a 90% chance that the Federal Reserve would limit the February rate hikes to 25 basis points. The Fed edged towards the market narrative. The Fed Philadelphia President Harker stated that it was now appropriate to raise interest rates by 25 basis points going forward, although the base case was still for a few more rate hikes this year. The Atlanta head Bostic also commented that he would be happy with 25 basis point rate hikes, and now the market is pricing in a 90% chance of that. So risk appetite held firm yesterday. We posted further gains after the US inflation data in equities, oil prices, and precious metals, and the retreat from intraday highs with a lot of potential good news already priced in. The Bank of Japan has intervened twice during the Asian session to cap bond yields. Markets still expect that the central bank will adjust policy this year, and the yen posted strong gains, with the dollar yen sliding to 7-month lows below 128.50. The dollar was pretty choppy as well, subjected to some fairly violent swings after the US inflation data, as we covered on the stream yesterday. And hit fresh 7-month lows on the dollar index before attempting to regain some ground. We've seen the Bank of England man stay hawkish. He maintained a hawkish stance with comments that underlying inflation looks pretty robust, with a risk of secondary inflation pressures. She expected that rates will need to increase further, and there is no risk of over tightening at present. And this morning we've had some GDP data. Markets recorded a 0.1% increase for November, compared with expectations of a 0.2% decline, with some support from the World Cup, which has been put down as the reason. Imagine if we'd won it, what GDP would have been. Still have to wait at least another 4 years for that. Okay, Steve, let's take a look at some charts, shall we? Want to check out cryptocurrencies to start?
Yeah, let's do it. So Bitcoin has continued its really buoyant start to the year. We've broken above that resistance area that we had around about the 18,350 level and punched higher all the way up to, got up to 19,114 on this chart. So we're well above the 100-day moving average now, looking to attack the 200-day moving average. We're getting a nice, great sort of like bottoming formation. Further upside, no real sort of like sign of it slowing down on the shorter term charts. If we look at the 4-hour chart, we've had a little bit of a stall here, but quite a strong rally between 4 and 8 o'clock yesterday UK time, and a little bit of a settling down, a little bit like this that we had the previous day. So looking for that extension to continue during the European and American US sessions. So yeah, no real sign of that slowing down. Well, let's take a look at levels as well on the what we're really looking at on Bitcoin. Really sort of like another flag pattern forming, bit of a punch higher. Support coming in around about the 18,600 to 18,600 to 18,700, and looking to break that high and push higher. Resistance at the 200-day moving average. We should sort of like see things slowing down around about there. That's at 19,500. So that's a level to watch if we get up there. As soon as we get up there as well, we've got the 20,000 hurdle to overcome. That won't be overcome anytime soon, I don't think. The momentum really needs to be a lot more punchy than that. So 20,000 that may be the target area. Ripple has performed pretty well as also. That's broken up past the obviously the 27th of the deck high, which we was 37.30, and we're getting up and starting looking at targeting the 100-day moving average. That comes in at 38.71, and the 200-day moving average comes in at 40, just around about 40 cents, and that's where we'll really get the resistance between 41 and 41.5 cents on XRP. Ethereum above the 55, the 100, the 200-day moving average now hasn't been above there, or closed above there, should I say, since April last year. So that's a good sign. Another bottoming formation we can see, double bottom formation forming. Measured move target on that. We can have a little play with this. Measured move target around about 1630, and that runs into the resistance around here that we formed in October, November last year. So a few nice little targets to look at on the cryptocurrencies, and obviously they'll trade through the weekend, whereas the other markets shut. But yeah, looks like blue skies, new highs for cryptocurrencies. Taking a look at gold, gold has smashed head on into resistance around about this 1900, 1905 area. We still got the measured move target of the inverse head and shoulders formation. That's in 1966. And again, yesterday's candle really, really strong into that resistance. The dollar weakness obviously lending a big helping hand there. Looks like we're going to hit that golden cross in the next couple of days. The 55-day moving average, the 200-day moving average, the crossover, and that will back up and this story of the bottom formation. So looks pretty decent, but obviously it's a bit difficult now to sort of like get in at these levels. You're getting in at resistance levels. Obviously buying dips is the better play. We've had quite an aggressive move over this last week or so, so I'll be looking for pullbacks to get in to set longs. Silver seems to have stalled though. That's a little bit bizarre. It always seems to sort of slow down a bit when people tend to focus on gold. We have already had the golden cross in silver, but we still haven't hit that inverse head and shoulders measured move target, just below $25. We seem to have had the opportunity. I mean, the dollar was trading around 104 when we first moved up here. It's trading at 102 now. So I'm slightly surprised this hasn't sort of like pushed a lot higher. Maybe we should look for a little bit of a opportunity in there when we talk about the gun to head trade idea. Copper has stalled yesterday, doji candle, so let's be a little bit careful with that today. The high was 420, the low was 412. That was a price range from yesterday. Off to a good start this morning. We're already slightly higher than last night's close, but we've had a really decent rally. This like 5 days of solid green candles. Targeting maybe a move towards the 430 area. That would be a 61.8% retracement of the original down move, and that would be something that would look nice on a technical basis. And again, you can see the sort of area around here, this area here, that is going to be quite a resistant area. we've had like good two-way price action from all the way back in May last year. So they're the levels to watch around about that 430 to 430 to 430 to 450 for me. Platinum, not really a lot going on. It's at its highs, trading around just under 1100, sorry, and 3 or 4 days of negative price action, but the dollar breaking lower this morning has helped. Palladium, we don't really do a lot on that. Let's take a look at crude oil. Crude oil again, another green day yesterday, and off to a good start this morning. 78.74 we're trading, and we're looking to target this 55-day moving average, which is just above, just under the $80 mark. And I'm sure we're going to run into some resistance there. The oil markets and the seem to be really struggling. Brent crude doing exactly the same sort of price action as WTI crude oil, but obviously trading at around a $5.50 premium. So the level to watch there is around about $86. That's where we'll find resistance. Natural gas, this is like I'm banging my head against the wall with natural gas, really looking for this punch higher, but it doesn't seem to be happening. Got a decent rejection yesterday. It looked at one point like I was starting to count my chickens, looking for this morning star reversal formation, but it didn't happen. So should I give up on that? I think I will today. I feel a bit battered by it, but there's plenty more markets to dive into on that gun to head. That's in head and shoulders formation, and this feels like a really solid form of support, but we have closed below it, and it looks a little bit scary now. Could go lower. Over to you, Joe.
Thank you, Steve. Yeah, let's have a look then, shall we? So big moves yesterday in a number of currencies as a result of the CPI. Let's take a look at dollar first. Let's get the daily chart up, and we can see that there was a pretty substantial break to the downside. So we know that this support level here that we've mentioned at 103.45 had given way. We know that prices were struggling to get back above it. We formed a couple of dojis, but yesterday it really started to gather some pace, and we saw a big impulsive move to the downside, and eventually hitting this target that we've been talking about for a while, the 50% Fibonacci retracement level. We did find some support on that initially, and sort of closed off of the worst levels of the session, but we're now on the back foot again and trying, if not actually at, taking out yesterday's lows. So indicates that further downside is possible. We've got the head and shoulders top pattern in place, and we're looking for a measured move down to 95.90. So that's kind of the ultimate target. Yes, there will be some levels of support along the way that we need to consider, but if we can close below this 50% fib level, we've got some previous swing lows from back here in May that's around 101.25. We'll then have the nice round number of 100, which is likely to provide a little bit of psychological support, and then below that we've got the 61.8% fib, which is down at 99.17. So it looks as though the dollar is set to remain under pressure and lower prices are likely. Let's take a look at Euro US dollar. That continues to accelerate higher following the completion of this bullish flag pattern, and looks set to go on and reach that 50% Fibonacci retracement level in the coming days. So looking very bullish there indeed. Let's take a look at cable. We can see that prices moved higher yesterday, not as bullish as Euro US dollar, but it looks as though it's broken out of some sort of wedge or pennant formation and potentially heading higher. Obviously, the next stage for us to reach would be these previous highs that we posted back in mid-December. So some pretty big moves in the yen currencies yesterday due to that intervention. So this is Aussie yen. So still mindful of this head and shoulders top that we've got on the daily chart. We saw a nice rally into the neckline, and yesterday we posted a really large engulfing candle, as you can see there. Really impulsive moves to the downside, and further follow through on that today, down by 0.5%. Personally, I'll be looking to sell into retests of the low of the candle prior to the impulsive move lower yesterday, around 90.99. If I can get some shorts on there, I'll be delighted, but it seems to be running away from me at the moment. So take a look at euro yen, similar kind of situation. Rallied into some resistance here, big bearish engulfing yesterday, and prices look to be heading lower, down by 0.8% on that today as things stand. Dollar yen also quite interesting. As we know, this has been trapped within this bearish channel, and prices yesterday broke down through those support levels that we had highlighted on the chart, the lowest being at 130.39, big close below that, taking out the lows, the swing lows that we posted on the 3rd of January, and again heading lower, down by 0.8%. So very much a bearish outlook there, and lower prices are expected. I'd now be looking for it to move into these lows that we posted back in May, around 126.39. There is a request to look at CAD yen, so I'll do that from Lavskins on YouTube. Thanks for commenting, sir. Let's take a look at this. So overall, daily chart looks as though we've completed a large top pattern. We saw a breakdown through those major supports back in early December. We then saw a consolidation, which ended up being a continuation pattern as prices continue to move lower. We have found some mild support around the 38.2% fib level at 96.49. Big move to the downside, as we know, yesterday. Now, what Lavskins is looking at is the potential for this to be an inverse head and shoulders on the intraday charts. And it's highly speculative, but yes, I can see that there is a case for that. We've got a left shoulder down here. We made new highs down here. So providing this pullback here doesn't make new lows, then there is potential for that to be a right shoulder. And typically when looking for right shoulders, I'm always interested in a kind of last pullback point before I really start to give up on that. And it's often the 78.6% fib. Sometimes it can be the 88.6%, although that's kind of lesser used. So providing it doesn't break down through these lows, there is a potential for maybe some sort of short-term turning point on this. So from a risk reward perspective, there's some support here at the 78.6. We are below it at the moment. Obviously, to be safe, you'd want to have your stop below the low of the potential head. And then obviously you could potentially target and move back up to the neckline. So some pretty decent risk reward on that. As always with trades, you want to be getting in as close to the point where you're expected to be wrong. So if you were to target that 88.6% fib, you could then have a much tighter stop, and therefore your risk reward would be dramatically improved. So if you are going to take on these speculative trades, you want to be looking for the best possible outcomes and the best possible reward for the risk that you're taking. So maybe some opportunity there, but overall the dominant trend is lower, but there could be a corrective move higher. And yes, this may be potentially an inverse head and shoulders, but it's got a long way to go before we can prove that. Any other requests on FX?
No other FX requests.
Okay, fine. Let's leave that there then. If anybody else wants me to take a look at anything, we can come back to that, but I'll hand over to Steve now. He can run through some indices.
Yeah, indices looking very powerful indeed, especially the FTSE that's broken up through the daily resistance. That, remember, we talked about the July 2019 high, smashed through that, looking really aggressive to the upside. Blue skies, new highs, and we're looking at the 79.03 level. So we're only 70 points away from the all-time highs. That's pretty frightening, really. Other markets are way away from that. So that for me looks like the one to watch. Really sort of like leading the way. No sign of it slowing down. In fact, pushing on and targeting that 7900 area to really sort of like start the year off really well on the FTSE. DAX has also broken up through some really solid resistance levels. Let me just remove this because it does sort of like, and we've got the crossover, obviously the golden cross we got back in the middle of December. That was like the first sign we were seeing this big sell-off, but we got a golden cross, which was really interesting. Prices held, and look at this rally that we've had at the start of the year. It's phenomenal. So looking really tasty. Should find some resistance up around about this 78.6% fib, but not specifically at that area. We should really sort of like if anything's 15,700 is more of a major level. There's the last year's February swing high. Levels to watch on an intraday basis, maybe yesterday's low. That comes in 14,944. Break below there, it puts us a bit under pressure. But there's no real reason to sort of like think that that's going to slow down. However, we look at the US, it seems to be a bit sluggish. Obviously, we've had this break higher above the downward trending resistance line. We've had the retest of that reverse trend line, and we've had the projection higher. And the 55-day moving average has formed the golden cross, and things look hunky-dory. We're doing our best to break through this resistance now. I don't think it's really sort of like this probably is. There's probably better targets to look at. Maybe the 35,000 level. That's still 850 points away, so there's still plenty of P to the upside. But yeah, yesterday's candle just obviously that is a little bit of a concern. We had a big sell-off after the figure, and then we had the rally back after that. So that forms a hanging man candle. Not so evident on the Dow, more evident on the Nasdaq. If you look at this candle, that's a bit of a concern for me. If we manage to get above and close above the high, then it negates it. I'll be happy. But we do have like the 200-day, the 100-day moving average coming in and trying to put a lid on that around about the 11,500 level. So yeah, just wondering whether that this might be a bit sluggish today. On the S&Ps, it's a little bit more interesting. We actually hit it yesterday, the downward trending resistance line, which we did breach mid-deck, but didn't manage to close above it. So I've negated that breach, left this really strong downward trending resistance line in place. We haven't had the golden cross in S&P yet. So that's a little bit of a concern. So again, if you look at the shorter term timeframes, could be an opportunity to fade it if you're not convinced by this rally, but it's a brave man to stand in front of this. Aussie 200 has projected really nicely higher over the last couple of days, and that looks to target a move towards 73.45, which was the swing high from 1st of December. China 50 had these hanging man candles. It looked like the momentum was stalling, and bang, pow. Obviously, the intervention in those areas has sort of like led to. Is it China that are intervened in the markets, or was that Japan? Oh, Japan. China's like taken a flight to the upside, broken through. Well, it's actually hitting or just through the August last year's highs, and in August. Again, we're getting this like 55-day moving average supporting everything, and also the 100 and 200 also flattening out and looking to turn to the upside. All in all, the indices look pretty rosy at the start. So yeah, interesting to see how those kick on. We've had a couple of requests for some cryptos. Let me just try and copy and paste these in. See if we get anything from here.
Matic, USDTP, and SolU. I'm so out of touch with some of these cryptos. I don't know what they are.
Don't know if we would want to look at the spot in that. Well, they're both the same anyway. So, and then is that Solana? I don't know. I can't remember. USDT. I'll put the spot ones on there. That for me, that's just a little bit easier to look at. So taking a look at these on a, let's take a look on a daily time frame. And daily time frame, it looks pretty positive. We had obviously this spike up in November, the big reversal, big sell-off 9th of November, and prices have pretty much held support down at 69.23. We formed a higher low now at 74.94, and we're now targeting the resistance here at 94.94. That I mean, you can see it's had again really decent sort of start to the year. The 55-day moving average has flipped and it looks to be turning higher. 200-day moving average has supported pretty well. Although we did dip below it, we're back above it now. It looks overall quite supportive on the daily chart. On the 4-hour chart, we've got the Ichimoku cloud, which is one of my favorite indicators, gives you a good idea where the support will be in the future. And also, but when it does tend to get, when the price tends to get away from the 4-hour chart, just be a bit careful with the potential for a pullback. As you see, it likes to pull back and retest the support. Make sure the momentum is still in the same area. But yeah, not for me, 95 cents is the one to watch, and there's resistance all the way up from 93 to 95. We've had a little bit of a pullback over the last 4 hours. That's a bit of a bearish engulfing candle. Maybe we could get the similar sort of pullback to yesterday and dip buying to continue. On Solana, let's take a look at the daily chart first. 55-day moving average is now provided support. Nice turnaround. and we've had obviously this big sell-off between the 6th and the 9th of November, and we're doing our best to get above that. For me, the resistance coming in around about 1880, and above that 26 cents is probably the target. Or would that be $26? Could be $26. $26 would be the real target, with the 200-day moving average coming down into that. That was the sort of swing low from June last year, and that was obviously a decent level. And once we broke through that, it just absolutely capitulated. But we've had a nice little bottoming formation, and wouldn't be surprised if we do get a retest of that area around about there. 26.13 for me would be a reasonable target area. Don't know if we can do some fibs on this as well, even just for this move here. Let's get the 61.8 in there. Yeah, it's not far away from there. So for me, the 61.8 would be a nice target there, coming in at nice round number 27 cents, $27. Sorry. Yeah, so very, quite constructive, but as I say, these rallies that we've seen in the last the last week to 2 weeks have been quite exponential. So be a little bit careful of diving in. Dip buying is because we're forming these, we're getting these higher lows in here, is quite a reasonable thing to do. Support for me on this 1490 really. Breakdown below there, it's a little bit more. We need a bit more confirmation from this 55-day moving average. 4-hour chart and the 1-hour chart are all looking pretty rosy in terms of trend. So the trend, obviously short-term trend, is higher. But yeah, as I say, be a bit careful if we get a break of this 1530. For me, that would give a double top formation and indicate that we could potentially retest down towards $13. Hope that helps.
Yeah, nice one, Steve. Thank you very much for going through those. Okay, let's move on to the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, what would we trade right now? So each of the ideas that we come up with must have stops and targets. They must have risk reward ratios that are better than 2 to 1. And these ideas will be closed at 9 p.m. UK time when the stops or the targets are reached. All the ideas are published up to our TradingView profile, so if anybody wants to check them out, feel free to do so. That's signal_center. And also, as of this year, we are now running a live account on these trade ideas as well. So £2,000 has been deposited into an account with Owanda. We're trading these via TradingView, just to try and make it feel a bit realer, and just show that hopefully using our expertise and knowledge of financial markets, that we may be able to turn a profit by just coming up with ideas pretty quickly. So let's take a look at how our ideas went yesterday. Steve was going third time lucky on natural gas, still trying to buy around this support, which I think is the logical thing to do. Looking for maybe an intraday head and shoulders there. Nice breakout above the neckline. Did it get any follow through? Initially it did, but then it kind of pulled back. So sadly you're offside by 0.3R on that at the 9 o'clock close when that was exited. And then we had the dollar Swiss trade idea, always going to be a risky play ahead of the CPI number. And we had some resistance there that had formed on an intraday basis. If we click the play button, we can see there was a spike higher at that the time of the CPI number, but thankfully prices remained pretty subdued throughout the day. So we managed to turn a profit there of 0.9R. I don't know if you can see, if we can see it on there, Steve, but I think our balance, we're down about 10 quid on that, so half an hour effectively.
Yeah, that's
so.
Yeah.
We're risking 1% per trade, basically, each of us, so 2% per day. And let's see where we can go with this. So, Steve, you got an idea ready? I have.
Yeah, you go ahead, mate. I think I'm sort of diving into the Forex world, so I'll wait to see what yours is, so I don't sort of step on your toes.
Right, so this is mine. I'm looking at Euro New Zealand dollar. So this is the daily chart. First of all, we can see that prices exited from a wedge pattern. We found some support around a 61.8% fib level, but if we look at price action over the recent weeks, we can see that a fairly substantial level of resistance has been formed at 169.92. We've had a couple of attempts at trying to break through that. Yesterday we had a go but closed below it, so that indicates maybe a bit of a swing failure. And if we look at today's price action, we actually made a marginal new high, but already have come down to move back below that resistance level. Very early in the session, of course, lots can change, but I've got a gun to my head, so I've got to do something. This is the intraday setup here. We can see that resistance line at 169.92, and we can see that prices are maybe rejecting that now. So I want to sell it at market, Steve, which is 169.68 on my charts.
Right, then tell me again what it is, Joe. Sorry,
Well,
I'm
if the
got
market
like
price you don't need to
distracted.
worry about, so we're just getting there. It's the stop that we need to go with, which is at 170.47.
Yeah.
And
Create
the
new
target.
order. Oh, hold on.
Oh, come on. Need a new order filler here. Someone want to come in and do this for him?
You can't trade this symbol, non-tradable symbol, Euro New Zealand dollar.
What?
Yeah. Don't know why. Ah, hold on. Because I'm on the wrong page. Dear, oh dear, order filling skills shot to bits. Let me just get this. I was trying to sell it on another broker's account. That's not really a good
Okay.
idea, is it?
No, it's not ideal.
Right. Here we go. Euro New Zealand dollar, Joe. We're going
Yes.
for it. Come on, let's go. Let's trade
Stop
this
loss,
bad
Steve.
boy.
170.47.
We're selling it. 170.47.
Yep. Target 166.73. 166.73. 1% risk.
There we go.
Get it on.
3.69%.
Yep. I've got
Bang.
3.73, but obviously there's a bit of cost in there. So that's all done. So trade on. It'll be published up to the trading view profile. I'll do that now while Steve's going through his idea.
Well, Steve's messing about like a numpty. What am I doing? Honestly. So, yeah, I was looking at a few, really sort of thinking about the sort of like the yen moves that are going on. So I was looking at dollar yen, sterling yen, also looking at dollar CAD. Let me just get that up here. Oh, yeah, dollar CAD. Yeah, for me, dollar CAD is the one I'm going to go for. Over the last few hours, it's broken lower. It's broken through the support level, and I'm sort of thinking further downside. So where are we targeting? The 132.30, around about that area. So that should be ample enough for us today. So let's create the order. Going to sell it at market. Stop. We want to risk 1%. We're talking about 134.06, and that should give us a, oh, that's a 4-to-1. Here we go. We sold that bad boy. Have I done it properly? I've targeted the move a lot lower, but anyway, I'm going to go for that. Breaking down through the support at the moment, dollar CAD, going short of that, and I'll give all the details of it later. Really looking sort of for placing the stop above the Ichimoku cloud on the hourly chart. But yeah, dollar feels crap at the moment, and Canadian dollar looking a little bit better, a little bit stronger. So let's see. Oh, did that set gone in? It has.
Yeah, I
There
can
we
see
go.
it on the platform you're in.
Yeah, already 80p up.
Happy
Easy,
days. Take it.
easy, easy.
Take it. Okay, let's have a look at the data that's due out today. So obviously it was all eyes you read yesterday on the CPI, but today we do have some high impact data, which is due out at 3 o'clock UK time. That's the US University of Michigan Consumer Confidence number. And then that wraps up the week. So later, or next week, we've got the Chinese GDP number, which is due out on the 17th. And we've got the Bank of Japan policy decision. Already they've been obviously dabbling in the markets over the last 24 hours with some bond purchases. And we've also got the latest read on inflation in the UK. So a few bits to look forward to next week. Hopefully everybody's had a good week. It has been a pretty choppy one. Hopefully lots of opportunities for everybody out there. We will be back next week. Well, I'll be back next week. Steve's going to be hopefully trying to sun himself in Tenerife, but yeah, hopefully the weather's good, Steve. If not, then you'll have to just come on and stream all day
Yeah,
to keep yourself
exactly.
busy.
Yeah. Wow.
Okay, lovely. All right, we may see you next week, Steve. If not, have a fantastic holiday, and everybody have a fantastic weekend, and we'll see you next week.
Cheers all.
Bye.